Moving countries can be one of the most exciting and most challenging things you'll ever do. And we're here to take one big worry off your plate: your taxes. At Expat Taxes, we understand the complexities of Irish tax from your perspective as an expat and tailor our advice to your needs. With decades of expertise, our team at Expat Taxes will help you navigate tax residency, cross-border taxation, reliefs and returns, and will work with your country's tax advisor to make sure your taxes are sorted. Whether you're an individual or a corporation coming from Australia, the United States, the UK, or anywhere in the world, we want to help you. So visit us at expattaxes.ie to book a consultation today, and let's make moving to Ireland easier together.
Welcome to Tax Bites for Expats, the top tax tips you want to know as an expat. The podcast is here to help answer the common queries and concerns expats have when moving to or from Ireland. Complex taxes explained simply. We'll focus on the Irish and international tax issues to be aware of to ensure you save time, money, and stress.
Hi everyone, podcast producer Matt here. As the summer in Ireland starts to spin down and schools start to return, we're taking a break from our regular programming to share some guest appearances that Stephanie Wickham, our illustrious host, has made across the year. This recording is from Southeast Radio on the Business Matters radio show with Karl Fitzpatrick. In this episode, Stephanie shares a bit about how expattaxes.ie started, her background and career in Western Australia, and a new product that the team is working on to make dealing with cross-border taxation a bit easier. If you know someone who is thinking about moving to Ireland or is already here and could benefit from Tax Bites for Expats, make sure you share the podcast with them. And if you'd like to submit a question or query to be answered on the podcast, send it to info@expattaxes.ie. All right, let's hear from Stephanie and Karl Fitzpatrick.
Southeast Radio's Business Matters with Karl Fitzpatrick.
Well, having worked as a Big Four accountant, Stephanie Wickham noticed that many expats like herself were posting questions on social media about tax in Ireland and how it impacted them. Recognising that there was a gap in the market for providing tax advice in this area, Stephanie established Expat Taxes, and the business has been going from strength to strength ever since. So what type of advice does Expat Taxes provide and what market is it now serving? Stephanie joins us to tell us more. Stephanie, we'll be delving into the intricacies of international taxation. But first, I'd like to get an insight into your career as a Big Four accountant.
Thank you so much for having us. We really appreciate it. I trained as a chartered accountant with KPMG and also completed my chartered tax advisor studies many years ago now in Dublin in their corporate tax department. Myself and my husband then relocated to Western Australia, where I worked with KPMG there, but transitioned to a different type of role in their business where I worked with expats. So that was my first foray into working with expats and had exposure, particularly in that Australian role, to expats from all over the world who would go to work in Australia in the oil and gas and mining sector.
So when you returned home from Australia, you decided to establish Expat Taxes. Where did you see the niche in the market for that?
Quite honestly, probably on Facebook. Lots of people in the expat forums that I would have joined when I was planning my return to Ireland asked tax questions. And it struck a chord with me that if people felt the need to go to a place like Facebook to ask questions, that perhaps the questions they were asking weren't freely available, whether it's elsewhere online or from their accountant. So it sparked an idea and really the concept grew from there.
And typically, who are your clients today?
Very varied. We have a very interesting client base. Predominantly, they fall into two broad categories. The first would be a person who perhaps has never lived in Ireland before and may be from the US or the UK in the main. They are planning to come to live in Ireland. Perhaps they have an ancestral connection to Ireland and would like to live here. Usually in their retirement years, come here, buy a house and settle. And the second category is returning Irish diaspora. So Irish people who maybe many years ago or perhaps more recently went, lived and worked abroad, like I did myself, accumulate wealth as their career progresses outside of Ireland, and then decide to return, usually to either see their family grow closer to the grandparents, or perhaps later in their career when they want to retire back to Ireland to be closer to family as they kind of get into their retirement years.
And Stephanie, what are some of the tax issues that your clients experience?
Confusion is usually the main one. Uncertainty as to how the rules apply to them. In the main, there's two broad categories in terms of how Irish taxes apply to them. They're either entering the Irish tax net, triggering residency and liable to Irish tax on worldwide income and worldwide gains. So that's an event they like to plan for. Or alternatively, they are relocating to Ireland but retaining a non-Irish domicile, which very simply put means that their foreign income, even if they earn it when they're resident in Ireland, is not taxed in Ireland. So that offers quite a planning opportunity for those clients.
And for those that don't plan, what challenges do they run into as a result of that?
Usually an unanticipated tax bill. There are many opportunities to plan for when you are returning to Ireland, and largely within the OECD, Ireland has one of the highest individual income tax rates. So it's pretty broad stroke statement, but it's fairly accurate that Irish tax rates are likely higher than what you've encountered abroad. So that as a concept itself presents an opportunity to plan to come into the Irish system. In other words, if you delay considering your Irish tax position until after you've come back, you've potentially missed an opportunity. The window has closed.
So that's the most common mistake that people make when locating to Ireland.
In my view, it would be, we work with clients and of course we'll support them. And it's not to say that there isn't still opportunities, but by and large, the main opportunities exist before an individual triggers Irish tax residency. And the point at which an individual comes within the Irish tax net is very much contingent on when they arrive in Ireland and where they've come back from in terms of whether we have a double tax agreement with that jurisdiction or not.
So if somebody is considering a move to Ireland, what process do you bring them through to analyse their exposure in that respect?
Well, we've worked with, I think, upwards of 3,000 clients now in the last 5 years. So we've come across many, many scenarios. So the process that we follow allows people to book an online consultation via our website and meet in a digital setting with a chartered tax advisor. In advance of that consultation, we collect information about their personal situation, so we understand what assets and income they have, and we allow them to raise questions and concerns that are obviously specific to them, and we use that session to address those questions, and it allows them to identify the opportunity they need to consider, or in some circumstances, it may just allow them to get comfortable about what they need to do to comply with the revenue commissioners when they come back into the Irish tax net.
And did the removal of the concept of domicile tax status from the UK tax system in early April result in an increased demand for your services?
In honesty, it hasn't. And I think that's mainly because the way that the system worked in the UK, I would go so far as to say their remittance basis of tax, which is linked to the non-domicile concept, wasn't actually as generous as ours is. So we haven't actually noticed a huge influx. The majority of our clients are coming at the moment from the US, and that's most likely linked to recent political events.
And are most of those US citizens of a retirement age that are looking to relocate to Ireland?
We've had inquiries from families who are looking to relocate their school-age children into the Irish system, and for as a family to relocate. We have had employees of large multinationals who've requested internally for a transfer to the Irish office of their American parent. And it can be quite a mix. I would say roughly 60% are looking to retire here if they have a right to do so, and the remainder are probably of working age and still in the workforce.
How does your advice differ, let's say, for somebody that was born and raised in Ireland that left and went away and now is coming back versus those that are, let's say, US or UK residents?
So it's a good question. So I suppose somebody who's Irish who went abroad and who is now returning to Ireland is most likely Irish domiciled. And what that means is they don't have an entitlement to the remittance basis of tax. Quite simply, their window of opportunity to plan is very much contingent on taking advice before they become a tax resident, because that allows them to potentially liquidate assets, before Ireland has a taxing right. If you compare that to somebody who is not Irish born and raised and who doesn't, under advice, have an Irish domicile, they can come into the Irish tax net but benefit from the remittance basis of tax. So, for example, if they have a source of income outside of Ireland, be it rental income from our foreign property, that income can stay outside of the Irish tax net, and we need to put in place a plan to ensure they understand how that system works, and also to discuss with them how they might take advantage of it such that they don't remit the income to Ireland and find a way to spend it effectively outside of Ireland.
And what is the remittance basis of taxation?
It's essentially a delayed payment of tax. So what I mean by that is, for most people in the Irish tax system, if you have an income or you sell an asset and make a gain, you need to pay tax to the revenue commissioners. But if you're on the remittance basis of tax, it means that if you have a foreign income or a foreign gain, you don't pay tax. You're not required to pay tax on that income or gain until you bring the income or gain to Ireland. So it offers an opportunity to somebody who qualifies for that basis of taxation to delay the payment of the tax to the revenue commissioners, potentially until maybe their income level has fallen to a lower level and their tax rate is lower, or they may never remit the income to Ireland and therefore can spend it outside of Ireland, and the revenue commissioners do not claim or have a right to tax it.
And talk to us about the web-based application which Expat Taxes has developed to simplify the tax remittance process.
That's called Remitties. It's an application that we're working on. As you said, it's web-based. So what we find for a lot of clients on the remittance basis of tax is that there's quite a lot of confusion as to how it applies in practice. We explain it simply, but it's important for clients to be able to, on a day-to-day basis, which means they need to understand what income to remit from where. And there are quite specific rules about how income gains and potentially pre-residency capital should be kept separate to avoid issues or unforeseen tax consequences if the amounts are subsequently remitted. So this application aims to take the complexity from it, explain it simply, and give people takeaways so that they can live their day-to-day lives.
And aside from the UK and the US, what countries or territories are your clients contacting you about, and do any of these areas operate a particularly complex tax system?
We have a lot of interest for people who are perhaps running Irish businesses or coming up to retirement age to go to places like Portugal, Italy, sometimes Spain, and maybe Cyprus. So we have a podcast ourselves where we've interviewed tax specialists from all those jurisdictions, and the rules are in these places designed to incentivise certain cohorts of people to relocate there and offer tax advantages for doing so. And as with any tax relief, there's complexity when you get into the detail of it. So we would always advise on the Irish side in conjunction with a foreign advisor, but that is an area that we do see interest, as well as a group of people who maybe go to work in the Middle East, where obviously the tax rules are simple because there is, for an individual, quite often no personal income tax.
And since you started Expat Taxes, talk to us about the level of growth that you've achieved and how you've done it.
It's been shocking at the growth we've had, to be honest, and I think it just speaks to the niche that we operate in. We have grown from myself just 5 years ago to now a team of 9, and we operate across 3 different countries, and we are working with people in over 25 countries. We've worked with upwards of 3,000 clients, as I mentioned. And the process, I think, that has really served us well was COVID, because it forced us all to go online, and it allowed perhaps a group of people who maybe didn't spend as much time online to hang out there. And as a result, it became common to engage with your doctor or your physio via computer screen. So why not your tax advisor? And it suits our clients to speak to us in a digital setting, which means we don't have a bricks and mortar office. We are based across Ireland and England and Spain. But yeah, in terms of the growth, it's been amazing. In terms of the website growth, the level of interest we've had, it's exceeded our expectations at every level. And we actually went on to win the National Prize Awards, the Southwest region. We won that category. So it kind of was a real testament to the work the team has done to grow quickly and strong.
Congratulations on that. And finally, Stephanie, are there any international taxation changes coming down the track that may impact expats in Ireland?
We would hope to see, and there's been murmurings that there'll be changes to Ireland's offshore fund regime, which for anybody who isn't familiar is quite a nasty tax regime that taxes certain investment accounts at 41% at a flat rate for income and gains, and automatically applies a tax on unrealised growth every 8 years. This is a very punitive regime for people who are moving to Ireland with foreign investments. And then the second piece was the Commission for Taxation report a couple of years ago recommended that the remittance basis of tax would be limited to 3 years. So we haven't seen that transposed into legislation in Finance Acts. But of course, none of us have a crystal ball, and it's difficult in the current political environment to work out what might happen next.
Well, if you've just tuned in, that was Stephanie Wickham from Expat Taxes. And I'd like to thank Stephanie for providing us with practical international taxation advice this morning.
Southeast Radio's Business Matters with Karl Fitzpatrick.